So 2022's real estate market was definitely different than what we've been used to for the last 3 years. I want to share with you all some of the data and information about what's going on in Northwest Indiana's real estate market as well as nationally. So first, let's look at a quarterly comparison of 2021 versus 2022. These numbers are surprising, but we're going to end and look at 2022 as a whole versus previous years and show you that it's not necessarily that surprising. So first, let's look at closed sales. If you look at the fourth quarter of 22 versus the fourth quarter of 21, you're going to see a 29%, almost 29% drop in total transactions. Now, there's something that we need to make clear here. The fourth quarter of 2021 was the single busiest and largest transaction quarter in history. And why was that? There was so much demand during that period of time. If you look, and from a fourth quarter perspective, if you look at it, there's a surprising amount of demand at that time. 2021, significantly hot real estate market with significantly low interest rates caused a lot of deals at that time. So because of that, the fourth quarter of 2021 is really hard to compare to. But all you're going to see is that the real estate market is down 29% or 40%, whatever it is in terms of transactions. It's a very skewed number. It's only because it's fear and they want to scare you about what's going on. We're going to come back and look at that. But there was a big drop year over year in quarter four and 21 to 22. Next, let's look at average sales price. So even though there was a large drop in the amount of transactions from quarter four, the average sales price actually was up quite a bit. And you can see these numbers here quarter over quarter. Every single quarter, there was a higher average sales price in Northwest Indiana versus 2021's quarters. And last is days on market. So if you look at days on market, the fourth quarter of 2022 was the highest that we saw in the last 2 years, which is 29 average days on market. When you look at this graph, it looks like it's a high number. The reality is it's really not. So let's look at an annual comparison of 2022 versus the last 8 or 9 years. If you look at this graph here from 2014 to 2022, you can see actually 2022, besides the COVID years, which were anomalies in the real estate market, besides that, 2022 was actually the second best in terms of total transactions. So if you look at it, it was actually an extremely strong real estate market, and besides the fact that you're hearing otherwise. Now, total sales volume, although we had less transactions, the sales volume was actually about the same. You could see in Northwest Indiana about $3.1 billion in total sales volume transacted with residential real estate. The average sales price, once again, went up about 10.5%. So the last 3 years, if you owned a property in Northwest Indiana, your property appreciated roughly 10.5% year over year for the last 3 years, and 2022 is included in that. Now, days on market. We had talked about days on market and that number being higher in the quarterly numbers, but if you look at from 2015 on, right, 2014 on, it is the average days on market in 2014 was 96 days. In 2015, it was 91 days. 2022 was 22 days. So it was still about 1/5 of the amount of time of a normal average market. And then to finish this out, we're going to look at month supply of inventory. Today, as of the current month supply of inventory, this graph here shows you that a seller's market is anywhere from 6 months or less, and a buyer's market is 12 to 6 months. And you can see right now we're under 2 months supply of inventory, meaning if no more houses were listed for sale and we were selling at the current pace that we're selling on a monthly basis, we would be out of inventory in 1.78 months. That's a very limited number of supply. So the big thing to look at from a national perspective is this is really becoming a more normal market, which is necessary and it's great. If you look at interest rates here annually from history, you can see back in the late 70s, early 80s, interest rates were astronomical. What we're seeing now is the interest rates are in the low 6%, anywhere from 6 to 6.5%. That is higher than we're used to, and it is sticker shock because we're used to 2.5%, 3% interest rates, which should and probably will never happen again. It was not normal. That's why we saw what happened in the real estate market over the last few years. Now, if you look at this here, why are interest rates not 5.5%? Historically, the spread between the 10-year Treasury and mortgage rates is usually about 1.75%, 175 basis points to 200 basis points, 2%. Right now, the spread between the 10-year and mortgage rates is about 2.5% or 250 basis points. What this is showing us is that rates are overinflated right now because of the fact that the Federal Reserve, is trying to slow down inflation in the economy. What we should see, and what experts are telling us, is by the middle of this year, we should see rates level off to that normal spread between the 10-year and mortgage rates, somewhere in the mid-5s, and should be a very strong, healthy real estate market. Specifically in Northwest Indiana, I don't think that we are going to see what a lot of these bigger metropolitan cities like Austin and Miami and all of these areas that saw ridiculously and unsustainable growth in values. I don't think that Northwest Indiana is going to see the changes that you're going to see in those markets, considering we're a hub right now for a lot of Chicago and Illinois and people moving this way, as well as it's a great place to live and we are not overinflated in our values. So that's a look at 2022 and into 2023. My opinion is it's going to be a very healthy, normal real estate market, which the last 2.5 years was completely unsustainable and not normal. So that's what we should be looking at. If you got any questions on this, would love to talk further with you all. Thank you for watching. Looking forward to 2023.